So in your listing, all of those customers that we just got done with for the whole month of February, so Albert Company, Frank Booth, Jason Henry, all of those guys were in this subsidiary ledger. We had a total for the month of 2,150. It was our first month of business, so we only have the 2,150 in our schedule of accounts receivable. So in March, if any of those were paid off, then they would be reduced and you wouldn't have them, or you would have a lesser amount, and you potentially would have more customers and higher or more sales. So you have to keep track of that. The balance of the accounts control account in the general ledger should always equal the accounts in the accounts receivable subsidiary ledger. So you have to make sure that you prove that. Flipping pages. Okay. Sales taxes. Okay. Sales taxes. Government agencies often require sellers to collect sales taxes from customers and to periodically send these taxes to the appropriate agency. And if that's the case, in your sales journal, you're going to have another column. So, and you can see in this case, they have a separate one for accounts receivable, sales tax, payable, and credit sales, because you have to collect sales taxes. So, for like Minnesota, there's a Minnesota sales tax of, I think it's 5%. But then if you live in the Hennepin County, there's another 1% or 1.5%. Then if you live in Minneapolis proper, there's another 1.5% or whatever. So it ends up being like 7.25 or 6.75 or something like that, depending on where you live. And St. Paul also has a sales tax. Some of the other cities also have sales taxes. So you have to know what, usually by zip code, it's determined how much sales tax you charge. But so over the whole month, you collect sales tax for all these clients, and you have to remit that into the government. So when you file your state sales tax reports, typically on a monthly basis, you'll be submitting that in on a monthly basis or a quarterly basis, depending on how much sales tax you have. Now, federal government does not charge sales tax, so it's only a state type of thing. Sales returns and allowances. If a company has a few sales returns, they may be recorded in the general journal. So there's your sales. That's just how we've been doing it in the past. So you just go to your general journal, make sure that you list the name in the accounts receivable, so because that's also going to get posted in your subsidiary ledger, not just your accounts receivable control account. It's going to get listed in both. So you have to make sure you put the name in so you can track where it went. Company with many sales and returns may use a sales and returns and allowance journal, a separate one. But typically, you're just going to run it through the general journal. So here is a picture of a cash receipts journal, and as you can see, there's the date, the account credited, which means the customer name, the explanation, what happened. Is it an invoice? Is it a cash sale? What kind of a transaction is it? So if it's an invoice that was, you have to list who in accounts receivable made that payment and what the invoice number was, so you can track it. And then how much cash did you receive? And then there's columns for sales, because those are for your cash sales. And then accounts receivable, and again, that will go to the accounts receivable and to the accounts receivable subsidiary ledger. What does it say? Just a second, I got to read it. There's a column for sales discounts and other accounts that may have received that. But if you have cash sales, you have to make sure you report the cost of goods sold. So all those items are in there. The totals are all going to be posted at the end of the month, but in the subsidiary ledger, you're going to make sure you do it on a daily basis. So cash receipts types are cash from credit customers, cash from cash sales, and cash from other sources. Footing, cross-footing, and posting. You always have to make sure that your debits equal your credits. I've kind of been hounding on that all quarter long. You have to make sure that debits equal credits, because if they don't, then you're out of balance. And if you're out of balance, that means something's wrong. So either your cash didn't get recorded, your sale didn't get recorded, something is wrong and something isn't recorded correctly. So you always have to make sure that in each of your journals that the debits and credits match or total. So add up all your debit columns, all your credit columns, make sure they foot and they cross foot. And then when you do your posting, make sure that they do the same thing. Now with automated systems, you don't have to do that because that's done automatically for you. Here is a copy or a picture of a purchases journal. So again, there's the date, the account, which is the vendor, the date of the invoice, the terms of the invoice. Then you can see there's accounts payable and inventory, because most of the time your purchases are going to be for inventory, but they can be for many other things. So then you have other columns for the different items. So if you have something in the other account column, you have to make sure you've indicated somewhere what it is in that account, so it gets posted to the correct account. So, and the column totals are you're going to post on them at the end of the period in a total, except for those other accounts because you might have more than one account in there. And again, so now you can see here's a picture of the vendor subsidiary ledger and each of those dates. So for Horning Supply on February 3rd, if you go to Horning Supply, you can see that we owe them $350. And again, it's a credit because it's accounts payable. We know that accounts payable has a credit balance. And again, make sure your debits and credits always equal. Proof in your ledger. Schedule of accounts payable lists each supplier and the balance owed to them. Somehow I got that out of whack. Okay, there we go. Make sure that the balance in your control account in your general ledger equals your accounts payable subsidiary ledger. And if it's an automated system, this is automatic, and you can do an aging. So the next type of journal we're going to look at is the cash disbursements journal. So there's the date, the check number, the payee, the account debited. Okay, so if it's, for example, if it's accounts payable, you're going to list the company, so you make sure you get it into accounts payable, and you can post it into subsidiary ledger to show that we actually paid that one off. So then you're going to have a credit to cash because it's a cash disbursements journal. So to reduce cash, you're going to credit it. And again, for inventory, that's for your when you make payments, and that's for your discounts that you're taking. And then your other accounts, you're going to have those listed. You're going to have list account numbers with those. So those again won't be listed in total at the end of the period. You're going to list those separately. Then your last one is your accounts payable account. Make sure that anytime you hit that account, you hit a subsidiary ledger also, and all of those payments and debits. So make sure that your cash, because your accounts payable is the total, so make sure if you take a discount that you only post the whole amount to accounts payable, and the cash amount goes just to cash. So there you go. So in the general journal, the only things we're going to have in the general journal are our adjusting entries, our closing entries, our purchase returns and allowances, and our sales returns and allowances. Computer technology and accounting. Off-the-shelf software. Familiar accounting systems such as Peachtree and QuickBooks are designed to be user-friendly and menu-driven. Both are very easy to use and very usually used for smaller businesses. Integrated software, actions taken in one part of the system automatically affects related parts. For instance, when a credit sale is entered, several parts of the system are automatically updated. So what that's talking about is if you're using one of these off-the-shelf software packages, if you enter in a sale, it automatically records that sale in the accounts receivable subsidiary ledger. It also posts to the general ledger account, control account, and it also reduces your inventory and increases your cost of goods sold. Everything is done automatically, so you don't have to think about it. Data processing and accounting. Online processing enters and processes data immediately. Batch processing accumulates information for a period of time and then processes all of the data at one time, daily, weekly, or monthly. A lot of batch processing you can see is like when you are working on a cash register, and you know how they print out all those totals at the end of the day or end of your shift or whatever before they let somebody else on your machine, and they pull all the cash out. That's to tie everything out and make sure that it gets all processed correctly. That would be called kind of a batch processing. Online processing is when everything is done automatically and there's no tape, there's no nothing, it's just all done. Typically those are all online type entries. You don't actually see it, it's all on the internet. Computer networks and accounting. Every computer network, because it's a network, it's going to have a server. Then you're going to have individual workstations, and they're all going to be connected to the server. And then all of those workstations are also connected to printers. So then you can process your information on the workstations. It goes to the server, and then it goes to your output. Computer networks are links among computers, giving different users access to common databases and programs. So every time somebody goes into something, so a program, everybody can go into the same program at the same time. They can't necessarily access the same data. Like for me, a tax return, I'm the only one that can be in that particular tax return at a time. If somebody else needs to get in it, they need to contact me and let me know, because it'll tell them that I'm in it, and then they can go, and then I can get out, and then they can go in and get in. But only one. You don't want to have more than one person in the same account at the same time, because you could get corrupt data that way. Enterprise Resource Planning Software, which is ERP, is programs that manage and integrate a company's vital operations. Total ERP market, about $30 billion. So you have Infor, are 7%, Microsoft Dynamics is 6%, Sage Group, which is also Peachtree, Oracle Applications, SAP, and others. Those are all the different, those are for the bigger types of systems that are out there, not the little ones. The QuickBooks and the Peachtree is also for QuickBooks, or those are the smaller ones. Cloud computing. Cloud computing is the delivery of computing as a server rather than a product, which means you don't actually have the cash outlay for a server, which is very expensive. I think our server at work was about $20,000 for our last server that we purchased. So instead, you rent space is what happens. It's somewhere far away typically, and you don't have to worry about maintaining it. You don't have to worry about security. You don't have to worry about any of that kind of stuff, because they have to meet strict regulations in order to have cloud computing on their premises. So when you buy that, when you have cloud computing, all of your different types of devices, whether it be a computer, a tablet, cell phone, or a laptop, all can connect through the cloud. So cloud computing uses applications via the web instead of installing them on one's own computer. So they're all in one location, and you can immediately get to your software whenever you need to, no matter where you are, no matter how you're going to connect. You can get to the same data because it's all in the cloud. It's kind of a newer thing, definitely up and coming. I know we're actually talking about it right now. Like that's going to happen. Okay, global overview, systems, principles, and components. Both U.S. GAAP and IFRS aim for a high-quality financial reporting. System principles and components are fundamentally similar across the globe. However, culture and other realities often mean different emphasis on the mix of system controls. Special journals, accounting systems for recording sales, purchases, cash receipts, and disbursements are similar worldwide. Systems that employ special journals are applied worldwide. Further, the basic structure of special journals, as explained in this chapter, is one means to company efficiency. Segment return on assets. A good accounting information system collects financial data for a company's various segments. A segment is a part of a company that is separately identified by its products, services, or geographic market. So as you can see, companies reporting operations by segments. In industry, there's 59%. Geographic, it's 43%. Export sales, 27%. Major customers, 28%. What we're talking about segments is, for example, one of my companies is, part of it is a manufacturing company, part of it is horse racing, part of it is rental of a building. So all of them are different segments of their company, so they want to report, we report those items separately so you can actually see how they all work and how much they're all making. Shh, Daisy. So to find out how a particular area is doing, you're going to take the segment operating income and divide it by the segment average assets. So each segment, like the rental property I was telling you about, will have a total cost related to all the assets that it has. And you'll take that and divide that into the operating income and to discover how well that particular area is doing. So the example here is a Callaway Golf Company reports that it operates in 2 business segments, golf clubs and golf balls. The golf club segment shows a higher return on assets, but probably because of the price of those golf clubs, you're probably saying less golf clubs and more balls, but because of the cost difference, that's why you're going to see the difference. Okay? And our favorite slide. This took me a half hour last night, and it only took me 17 minutes today. Well, we'll see how this goes.